Hello, everyone, and welcome to the FinTech Finance Virtual Arena where we're hosting you today. I am your host, Ali Paterson, and today I'm rocking the headset because my microphone, this bad boy, unfortunately, is a wee bit broken, um, which is kind of appropriate for what we're going to be talking about today because we're going to be looking at what traditional banks need to do to get right in the next 10 years. For this session, we're going to be delving into what our panelists have to say. But joining me, first of all, we have the Global VP of Financial Services at Mobiquity, and a bit of a regular now on the FF Virtual Arena. Would you say, Matt? Matthew Williamson.
I've done one or two, Ali. Yeah, it's good to be back. We've got a great selection of people today, and I think the subject matter is really interesting, especially in the US market. So it should be a really good session.
Absolutely. Next up, and I'm always excited when I have this organization on the virtual arena. I'm a very big fan of Jim McKelvey's book, The Innovation Stack. It introduced the world of AP Giannini to me, who of course is the founder of Bank of America. And we have the pleasure of having Jorge Camargo, the SVP and head of web and app product from Bank of America. Jorge, how are you doing today? Whereabouts in the US are you?
Thanks for having me, guys. Currently based out of Los Angeles, California. So beautiful and sunny this time of year.
Over here in the UK, exactly the same. It's just beautiful and sunny constantly. Not raining at all. Not raining at all right now. Excellent. I will be bringing up AP probably at a couple of parts throughout this. Last but not least, we have Ruby Walia, who is a senior advisor for digital banking and has many leading roles across several traditional banks in the past. Ruby, how are you? And whereabouts in the world are you?
I'm in the Metro New York area, doing really well. It's a nice summer day. Very excited to be with this panel, and looking forward to the conversation.
Excellent, excellent. Well, let's set the scene. The reason, first of all, I keep bringing up APG is because at the time, turn of the century, he really was able to bring banking from being to a select couple of thousand people to literally millions by introducing kind of the branch network and be able to bring it out to that number of people. I appreciate that was 100 years ago, but Matthew, I kind of want to kick things off against that backdrop because traditional banks have been around for a long time, probably because they've been doing a lot of things, not everything, but a lot of things right. So typically, what have traditional banks done right?
When we look at what traditional banks do, is they do things very well, as in they're an established, trusted brand that often means accessibility, service, and safety. I think is fair, and also availability to a certain extent. I.e., if you look at a big brand, tier one type bank, they're in multiple locations across a country. Therefore, everywhere you go, you see recognition, and they've been with people through their journey. Whether it's graduating university, getting your first loan, first mortgage, that kind of thing. But the world has shifted a lot in the last 100 years, as we know. And I'm going to try and avoid the dreaded C word, but if we look at the last 18 months, the world imploded, exploded. And off the back of that, we've seen massive innovation. I think that's where we're going to see interesting movement in the future of banking and the adoption of an expectation of consumers as we move forward.
Very glad you brought that there in terms of kind of the consumer expectations, because that again what it all comes down to. Jorge, can I get you to weigh in on this in terms of some of the things traditional banks have typically done right?
Absolutely. And I think definitely traditional banks have done something right. In the US, the top 10 banks still hold probably north of $10 trillion worth of consumer deposits. So that's customers voting with their feet, if you would. But at Bank of America, we like to really give most of the credit to what we call our high tech, high touch approach. So on the high tech side, really continuous investment in digital capabilities and self-service capabilities, right? So Bank of America spends north of $3 billion per year and has done so over the past decade in technology. We have over 16,000 ATMs. And then the high touch approach is complementing that digital offering with an extensive branch network, over 4,000 financial centers throughout the US. So we feel that that's a really good and good balance combination for our clients, and that's what they want. That's what resonates with them, and that's what's helped.
Excellent. It is about the customer demand. The one thing that I'm always surprised about when looking at particularly payments data in North America is there is still very much a huge amount of use and demand of things like ATMs, like checks. There is still that kind of demand there from consumers. Um, Ruby, how have customer demands in banking, how have you seen them develop over the last 10 years? And how much of these changes are a result of what the challenges, what the neobanks are getting right?
Yeah, so I think if you go back, it was only 2007 when the iPhone was introduced, and it really popularized smartphones, made them ubiquitous, and I think that became a bit of a impetus for banks to figure out how to interact differently with customers. And so over the last 10, 15 years, we've seen the number of branches in the United States decline every year. If you go back to 2010, I think there were about 95,000 branches in the country, and now it's come down to in the low 80s. And so people are going into the branches less, and they're having different experiences, just as valuable, but they're higher value, more complex interactions like getting advice or applying for a mortgage. And the digital experiences that are becoming more and more popular are about creating the right contextual, highly personalized interactions while a person's going about their daily lives. And so you see this broad shift taking place both in what happens inside a branch and what happens with a person as they're going about their daily lives.
Absolutely. Matt, can I get you to weigh in on this against that kind of the context of what, I mean, banks, traditional banks, they need to get the customer experience right. I don't think anyone's going to kind of argue around that. But do you think that some of those demands are being driven by the neobanks, or is it something bigger at play?
I think it's something bigger at play. The neobanks came in initially with a view of we are going to destroy banking. Let's be frank, it wasn't even let's collaborate or disrupt. It's we can do it in a better way. And then we've seen that actually what they've done really well is the customer journey, the customer experience. But now we're seeing some successful ones. If we use Starling in the UK, for example, they've just turned profitable, which is a first for most neo challenger banks. And secondly, they've just acquired a mortgage lender, a new Fleet, I believe they're called, which is a traditional revenue generator. Current accounts, checking accounts are generally a loss leader or net break even at best. You need to offer other services like lending, credit, etc. So we're now going to see the view of what additional services can I add and how can I make this as simple as possible for my consumer. And from a bank's perspective, they can own the relationship, but they could supply access to credit, access to facilities that may not be on their own book. It may be through a partnership with another supplier or a buy now, pay later, which is not quite peaked in the US. But, Klarna and others are coming. Why wouldn't you work with them? And then you can offer services quite quickly. And to Ruby's point, the iPhone made access ubiquitous. Everyone wants their access and their access to services to be 3 clicks or less. Why do I need to go to a branch to figure something out? Why do I need to fill out paperwork when the data is actually on my device? The security is on my device. I have a thumbprint or facial ID, so I should be able to access things quickly, easily, and meet my digital lifestyle or digital lifestyle needs. If my bank happens to be the utility behind that, amazing. If not, I'll leverage someone else.
So glad you mentioned that, and I mean, I'm going to use a few UK examples because they're forefront of my mind at the moment. Starling, again, fantastic example in terms of being profitable, but they're profitable on their lending. And I think that's where the likes of Revolut and Monzo, they haven't turned profitable because they're not lending as much. Equally, Tesco Bank have actually shuttered now their supermarket in the UK have shuttered their current accounts, and they're just going to focus on their credit cards because it's where there's profitability. The traditional banks have got that ability to lend out funds. It is all about, again, that customer touch point. Jorge, now very much looking at kind of the the customer touch points and how those have been forced to change over the last few months. It is now about ones and zeros as a much more compared as a ratios. I don't want to get too much into the branches or not branches, but the digital touch points for customers are it's in many ways much more important than the branches are now. What do you think the knock-on effect is going to be for large organizations like yours over the next 10 years, especially when it comes to products that are actually profitable and that customer experience?
There's a lot in that question. So I think
I'll give you
to
40
set
minutes.
the
I'm going to let you
context,
take a
yeah, exactly. Take a seat. So I think to set the context, back to Ruby's point, 2007, zero smartphones. Now we have 4 billion people connected kind of constantly. And kind of the demand that we've seen from a client perspective has been all about how do you turn my bank into digital? The data point that I love is at Bank of America, if you add up every financial center visit, ATM transaction, and phone call we receive per year, you get about 1 billion client interactions. You add up all of our digital interactions across mobile and online, that's 9 billion. So by definition, it's like we are a digital bank, and that's where clients want us to be. Now, to your question, what has actually happened in the past 12, 18 months is we've seen pretty much on par with the marketplace, a 5-year acceleration. We've seen 5 years worth of growth in that usage of adoption of your different digital capabilities, mobile check deposit, transfers, kind of those killer features from a digital banking perspective. We've seen adoption skyrocket. And now that we are seeing more and more reopenings across the US and in certain states, what we're kind of trying to ascertain is how much of that is defensible, how much of that's sticky, right? And what we have seen is that in the majority of cases, those gains have remained, and in some cases have continued to grow. So we're very, very pleased that this adoption of digital continues to be such at the forefront of what our clients are doing, right? Again, what I think is most important is just understanding going forward what is the right balance that clients want to strike between digital and an in-person interaction. But at least on the digital side, again, we're just seeing just tremendous adoption and growth over the past few months.
How are you working out that balance?
So I think a couple of places. We call them bridges, right? Like, how do you create those digital experiences that then seamlessly deliver you into the financial center and vice versa, right? A couple of places are kind of the equivalent of like start a process digitally and complete it in person, wherever there's a limitation, like let's say identification or signatures are required. In other cases, it's all about streamlining. So with COVID, one of the biggest feature adoption areas that we have is banking by appointment. So clients, what they want is to go into a model in which they have the predictability of, I'm going to come in, I'm going to have an appointment, do what I need to do, and then get out quickly. So it's a lot of like ongoing listening to what features we see spiking and what clients are really looking for. And that's what helps inform kind of our longer term roadmap.
Ruby, just going off a little bit around what Jorge was saying, what elements do you think are not going to stick throughout the pandemic? What are some of the customer changes that we've seen over the last 18 months that you think are going to instantly revert back, if any?
You know, I think humans do have deeply ingrained behavior patterns, but at the same time, 18 months of behaving a certain way can cause new atomic habits to develop, right? And so I think Jorge is right. The pandemic has really been an accelerator of trends that were already underway. And other banks I talked to, they're all reporting a 5x acceleration of digital adoption over the course of COVID. I think it's a win-win. I think what you're going to have is more ubiquitous interactions as a customer is out and about doing what they do every day in their lives, where digital can use data in scale to create highly contextual and highly personalized experiences. And from a bank's perspective, it does a couple of things. One, it's migrating transactions from high cost channels to far more efficient channels. There's a order of magnitude difference, for example, in what it costs to process a check if you hand it to a teller versus if you deposit it with remote deposit on a mobile phone, right? It costs literally 10 times more if you go into a branch and hand it to a live person. So in fact, and many times the cost of processing the check can be more than the value of the check, right? There's industry figures that say that if you go into a branch and you deposit a check, it costs the bank $25 to process it. So I think from the bank's perspective, it's more efficient. And then also what it starts to do is create the right kinds of, sets the stage for providing the right services inside a branch. So you start doing more advice kinds of work rather than just simple deposit a check kind of work. So I think this is really, it's a win-win situation.
That's such a good little nugget there. Many years ago when I was a teenman, this is kind of, put it this way, I had to buy stuff on eBay with checks because I wasn't old enough to have a credit card at the time. And I discovered that if you go into a bank branch and ask for one of the giant novelty size checks, they would hand them across to you. So I have again, many years ago, posted a giant novelty size check to pay for some DVDs on eBay, and I dread to think of what it would take to get one of those huge ones and try and then process that compared to a photograph. I was probably very irritating teenager. Um, Matthew, ignoring my big novelty check story, um, we're looking at the customer experience, but from a kind of KPI perspective, do you think that for the kind of the next 10 years, that how are we going to measure the customer experience in the form of a KPI?
So I can't ignore the first part of that story. The first thing I've got to say is my kids would have no idea what any check, DVD, eBay, these are concepts way foreign to them. They're like, why didn't you just do it on the TV and watch the film and just stream it? That's their thing. But anyway, but moving on to the KPI piece, that's quite a large question, right? Because as always, you can always say there's one killer KPI, but then actually it breaks down into multiple ones underneath. But I think if you're going to talk about KPIs, we talk about customer experience, customer journey. Jorge made some really interesting points earlier about the hybridization piece. Not all of your customers have the same requirements, and then you need to work out: are you going to reject a specific segment and elect to not service them, or are you going to service everyone? And they have their own variations. But I think if you look at it realistically, as a bank, you need to adopt a digital culture. That's if you want to have a killer KPI, it's that. And I don't mean someone like Jorge obviously has that, but it has to be at the C-suite and the board level, so that then you have the mechanics of an understanding of where your future customers are going to be, and then you make the key decisions around. I looked at a Forbes article. I'm just looking at my notes below. Since 2008 in the US, 13,400 branches have closed. So both Jorge and Ruby alluded to earlier, these things were already starting to happen. The last 18 months have just accelerated it. So how do you make sure you service your customers? And part of that would be, we see in the UK, the hybridization model of banks sharing a facility or a site to service those customers that want an in-branch experience. So from a KPI perspective, it's got to be, what's your customer base? Which customer base do you want to retain? Which customer base do you elect to lose and underservice and allow them to be serviced by someone else? And then how do you make sure you give them the digital experience, lifestyle experience they want in the way they want it at the time they want it? Because someone else may be making a big decision who's digital native, like a mortgage, but would want the reassurance of speaking to someone in person to make them feel okay about that huge expenditure. Whereas someone else will just be, why can't I just talk to you on my phone? You've got my facial ID and rec. Can you put the money in my account or into escrow to pay for the mortgage?
Absolutely. Off the back of that, and also to tie in with, I'm not an 18-year-old anymore. I'm not the youngest market that the banks are going for. There is a kind of a digital market that are up and coming, who are even more digitally native and completely digitally savvy, who are unaware of what DVDs are. And so there is that demand. I don't need to go to I don't need to go to a branch. I don't need to have a checkbook. I don't need to have a physical plastic card. There is that element of people that is kind of up and coming. So looking to 2031. What are some of the key ingredients for a great customer experience that would apply to the Zoomer generation coming up, but also be a nice consistency with every other potential customer? I'll put that open to everyone of whoever wants to jump in first.
So I think what consumers really like is when stuff just works, right? When you get
Yeah.
into your car, you press the button and the engine comes on. You don't really think about what's happening inside the internal combustion engine. And so um, I think technology will continue to mature. It's on a hockey stick, and um, and as it does, and things like the Internet of Things become ubiquitous, there's going to be more and more signals coming in, and banking will become this ubiquitous service that's always available. It'll almost be as if your banker is now this virtual thing sitting on your shoulder, following you around as you go about your daily life, right? And so you get off a plane at an international airport, and you'll be given information somewhere, somehow. It could be your smart glasses, it could be your smartphone, about currency exchange rates. Or you walk into a car dealership, and the bank will know because you've been to a car dealership 3 times in the last week. Oh, you're shopping for a loan. Here's what you're pre-approved for. And there might be a message from your friendly virtual banker saying, Ali, go out, pick the color you want, and the bank is standing by, ready to do all the paperwork, so you can walk out of there with the car, right? So there's all these delightful experiences that banks are going to create for you, and frankly, some of those will include experiences that are best handled person to person in a branch, and so the ecosystem, the financial ecosystem that surrounds you, will know all kinds of information about you. You as a consumer, as an individual, will feel comfortable sharing that private data because it's being used to your benefit. You don't feel exploited, and it will take a certain amount of the evolution in people's thinking about data and privacy. But as they see the benefits from all of these services becoming available to them, they'll increasingly get comfortable with sharing their personal data with the bank, who already knows so much about their behavior from their financial transactions, and now they'll get more and more comfortable about the bank using it to benefit the customer. And the reality is that when customers are happy, banks benefit as well, right? So it's again, it's sort of this virtuous win-win kind of relationship.
This is one of the things about large traditional banks that I think they've been able to handle so incredibly well is, although trust for banks after the sort of 2007-8 crisis was an all-time low, people still hugely trust their banks with their data, with their finances. There's that element of security there. Um, as well as that kind of level of trust and the potential for, if you were to compare, say, a Bank of America with something like Umber Money in LA, Umber is not physically able to lend out millions of dollars worth of to their clients because they don't have that on their balance sheet. So you have, the larger banks have the ability to lend, they have the trust. What are some of the other elements that put traditional banks in a better position to offer that omni-channel experience that everybody wants, that ability to kind of walk into a car showroom, as you said, Ruby, and be like, I just want to choose the red one, and then I can figure out my payments from there. Well, what are some of the elements that the traditional banks have to put themselves in a better position that are often overlooked? Ruby, can I go to yourself for this?
Yeah, look, it's what Jorge said, right? They're spending $3 billion a year on technology and digital transformation. So, and the reality is that the big banks have the resources to be able to do that, and technology is a wonderful thing when you don't have to think about what's happening inside the internal combustion engine, but building it costs money in the first place. So having those kinds of resources, having the both financial and the people, the talent that it takes to make it work seamlessly, that's a key ingredient. And yes, the fintechs are sometimes really super smart and agile, and they can create delightful experiences, but they tend to focus on a tiny sliver of something, some part of the banking ecosystem, rather than the full breadth of services that ultimately all of us as consumers need, right? So so the ability to, as Matt said, from cradle to grave, provide a full spectrum of services, stitch them together seamlessly. That's a great advantage that the big organizations have.
Excellent. Jorge, can I get you to weigh in on here?
Yeah, absolutely. 100% agree with what Ruby's saying. I would say a couple of things kind of tied to the last couple of topics we've been talking about. Number one, the KPI for success is definitely that seamless experience. I spent 5 years at the Walt Disney Company before joining Bank of America, and actual KPIs we use there are talking about happiness, right? So using happiness as a banking KPI, a little bit more of a stretch, but it's around the same vein of client satisfaction, client experience, and just seamlessness. And kind of the second trend that's super important here is, yes, absolutely, what is happening with Gen Z? How are we addressing their needs? But what we are actually very bullish about is that by 2030, there's going to be more grandparents than there are grandchildren in the world. So that tech savvy senior, no more the stereotype of the grandparent that has to go into the branch because they are averse to technology, but rather a grandparent that is very, very comfortable with digital solutions and can go between digital and physical seamlessly. That's a trend that I think we are, again, very, very bullish on. Now, more directly to your question, what I think is a big opportunity that you're seeing in the marketplace today is kind of getting away from this notion of financial products, and that's what people have to shop for, and more to a kind of holistic relationship, like what do I do with my money? So instead of having a credit card and a personal loan and an investment account, how do I just blend all those seamlessly? And one of the things that we're doing at Bank of America is how do we bring those experiences from a Bank of America checking account and credit card and mortgage, and then like a Merrill Lynch, either a self-directed account or a wealth management account? How do you bring that entire bank into one place, regardless of what the regulatory framework is or the business units are? How do you simplify it for the client? And they get that whole end-to-end set of services that they can evolve into, right, throughout their lifetime. So that's one of the trends that we were super, super excited about and really investing in.
It's called open banking. It's all the rage here in Europe. Honestly, you guys need to get open banking. It will change your world.
I hear it's going to be huge.
I would actually argue, Ali, that we have open banking already, right? There's this group of companies like Plaid that are referred to as aggregators that essentially provide most of the services that open banking as a specification by the EU does. So it's more marketplace driven and it's more informal, but it's how the fintechs get access to customers' accounts with traditional banks.
Actually, Plaid, a great example there. I just wanted to touch on what you were talking about in terms of the KPIs and the sort of the happiness index. Is that one of the interesting things I find, particularly in the US, is when you have publicly listed organizations and almost have to kind of show results every 3 months compared to some of the sort of the credit unions, those that are not listed on the stock exchange and don't have to kind of report every 3 months and report every year instead. Do you find that the kind of the happiness index is almost sowing seeds for many years to come?
I think for sure, and we were talking about the notion of like the top-down culture that exists in different in companies, right? And for certain at Bank of America, the notion of treating the customer right and listening to that client satisfaction as a key metric is something that is just going to be pervasive throughout the organization and with us for a lot of years to come. I think many financial institutions coming out of the 2008 financial crisis really pivoted from a leadership and from a culture perspective back into trust building and responsible growth, which is one of our mantras here at Bank of America. And that's where you see that client centricity, that happiness, client happiness percolate throughout the enterprise, right? So I think that's definitely one of the things that I've seen here at Bank of America as I joined probably 3 or 4 years ago. That has really been so interesting, right? That the bank really focuses on clients so much, which as an outsider you wouldn't have thought so, right? But it's definitely the case that is the culture today.
Excellent, excellent. The last thing I kind of want to touch on, I suppose it does as well sort of tie in with the sort of happiness index. I don't want to go kind of too deep into ESG, but we got to talk about ESG a little bit. What are we seeing in terms of the future of digital and in-person banking? And do you think that banks are going to continue to kind of bring ESG into their strategies? Matt, can I go to you first for this?
Yeah, again, ESG is banded about, but often everyone focuses on the E and not the S and the G afterwards. It tends to be the environmental piece and carbon-based banking, offsetting, etc. So if we tackle the big E first, then obviously if you leverage digital services, collaboration with you, I'll name some of the brands, AWS, Azure, etc., then obviously you don't have to run 3 data centers to cover off disaster recovery, test, dev. You can then share actual energy costs. I think there's an example in Stockholm where one of the data centers, cloud data centers, powers the local town off the heat that's generated by the data center. So you can go down the food chain, which is very cool. But then if you come to the social part of it, we've talked a lot about Gen Z, and there's a reason we talk about it a lot, because it's the next generation that we need to capture and service appropriately. And their values are very different from every prior generation. So a lot of their decision making is going to be about authenticity and allocating and aligning with brands they feel fit their own values and sets, as well as the user experience and other things. So that's something where a lot of the banking community are not going to be able to continue and just say, oh no, we are green and we do great things because we offset our carbon footprint, but actually it's in our investment strategy. It's not in how we run the bank, for example. Or we say we offer financial inclusion, but actually we're electing to not let people deposit checks, or we're moving towards a cashless society, so we're going to let certain elements of vulnerable society be serviced by someone else. So it's going to be a very delicate balance of what you choose and how you work within that. But I think using the social part, where I think the banks and Jorge semi-referred to this in some ways earlier, I think where the banks have got a real opportunity as we move forward to the 2031 view is financial education, which sounds random, but if we go back to the talking around, 3 clicks or less, when I was a kid, you did chores, you got cash. You then use that cash to buy something. Now, you use a GoHenry or a Greenlight or something like that. You bypass the value piece. It's just, if I do this, it generates access to Y. and what other is. So you'll no longer have that touch point of cash where I've got $10, I spend 5, I've got 5 left. It's just consumption. I absorb something and that's it. So where I think the banks can really step in is articulating and explaining this is money management. This is how it can work for you. If you put $10 aside a month and don't touch it for the next however long, you could then put that towards a deposit on a house, whatever it may be. But it's that PFM element where people can suddenly actually understand, I don't have a lot monthly, but if I plan now and think ahead, I've suddenly got access to other things and achieve those lifestyle goals that I really want, but right now seem a very, very long way away.
Very, very well said. Ruby, can we go to yourself for this in terms of where we're seeing that kind of future of the where do we see the future of digital banking? Again, a nice broad stroke question for you.
Okay. I'll just build a little bit on the ESG side first, which is to say that I think there is a broad movement towards more socially responsible, ethical governance, acknowledgement that there are stakeholders beyond the shareholders. B corporations are becoming a thing. And corporations are signing up for a whole new set of governance metrics. So I think over the next decade, we will definitely see more and more ESG kinds of initiatives across not just banks, but across industry, generally speaking. And I don't think it's limited to any particular geography. I think this will become more and more ubiquitous. In terms of where digital banking is going, it comes down to the use of data and AI to create that virtual banker that's always available, that can guide you through all of the financial decisions you have to make. Those could be daily decisions, small daily decisions about where do I go for lunch or dinner. It could be little daily conveniences, buy my commutation train ticket, things that you would call a financial chore. So pay all my bills, monthly bills. The technology will make that easier, will take some of the friction out of it, as well as dealing with the bigger moments in life, the bigger decisions. Do I buy a home? How much can I afford? When do I replace my car? Do I lease or do I buy? It may even be that someday the banks will help you prepare your tax submission because they've got so much of your financial information available. So I think financial services will go way beyond the traditional boundaries that we've expected them to serve within. And so it's not just about it's not just about being a place where I keep my money and maybe buy a certificate of deposit and have a savings account and maybe if I'm part of a certain strata of society, then I have a brokerage account and I'm investing. This will really go into both everyday moments and bigger financial decisions that we all have to make. Banks will be there with you every step of the way, providing those kinds of services in a very seamless, always accessible form. I think you'll also see more and more channels through which those interactions will happen. Voice, can't help but reference Erica, is actually something that lots of people enjoy. And I think it's going to be less about what's a preferred channel of interaction. It's about what's the most appropriate channel of interaction at any moment. And so if you're driving, voice is probably the only sensible, maybe even legal channel of interaction, right? If you're walking by a branch and you have a half hour to kill, popping into the branch might be the most sensible thing to do. But you're in the doctor's waiting room waiting for your appointment, and you want some privacy, but you could pay a couple of bills. You could do that on your smartphone without having to talk to anyone, and you just get it done, while you're there. And so all of these, so omni-channel, we use that word a lot, but it's about convenience, and it's about what's appropriate based on your context in the moment. I also think that you're going to see transactions starting and ending on different channels. And so you might walk into your home, the IoT sensors around you will know that maybe you're the only person in that physical space. You might talk to an Alexa and say, or an Erica, and say, how much have I spent on restaurants? Because you're sort of thinking about how much money you've been spending on dining outdoors or outside. And Erica will give you a number that you don't like. And you say to yourself, I've spent how much on restaurants? Well, show me the list of restaurants that I've spent money on. And so the IoT's world ecosystem and the bank systems all say to themselves, wait a minute, so Ali's alone in his home. This list of restaurants is too long to read out to him. He started this interaction on voice, but we know he's got this big screen TV because he's in his living room and he's alone in that space. Let me just display the information over there. And it'll all happen seamlessly, right? And so it'll all just work. And what the technology ecosystem is doing is sort of leveraging your surroundings, the awareness that the system has about where you are and what your privacy context is. And it'll just seamlessly go from one channel of interaction to another to make that interaction meaningful and useful to you, right? So you'll see those kinds of things happening in the future.
On a more, I suppose, mundane note than restaurants having that all appear there, you mentioned earlier around taxes. Twitter always makes me smile during tax season with the amount of memes of the IRS says, pay your tax. You say how much, the IRS says, you work it out. Okay, is it this amount? Nope, go to jail. It's literally kind of as black and white as that. And to be able to have that kind of data to do that, it's a stress that you don't need, that can be solved with, as you mentioned, data. Jorge, I just want to come to yourself around this, just to kind of sort of in very kind of broad strokes, your view of the future of the digital and in-person banking.
Yep. So I think two main trends. One, personalization. Ruby really did a great job going thoroughly through that. But from our perspective, we have 66 million clients in our consumer bank. 40 million of those clients are digitally active. How do we deliver an individualized experience for them? As Ruby mentioned, is it voice? Is it using Erica, which has doubled in usage of the past year? Do you prefer more of a kind of like traditional tapping approach? And what is the combination of features you want? That's number one. It's going to be huge. The second one, which we were starting to talk about, it's almost like the TikTokization of finance, for lack of a better term. But how do you blend in educational content, bite-sized content, and insights into the experience and make it an enjoyable experience for clients as well? It doesn't have to feel like a chore, but rather like, oh, that's interesting, or oh, how can I kind of tweak or change my behavior in order to achieve better financial outcomes? And I think that's the next frontier and area of focus. We rolled out our life plan product late last year. So far, 4 million clients have kind of proactively gone in and said, hey, these are the goals I want to achieve in life. How do you help me get there? Right. So I think there's a lot of traction to be had there over the next decade in getting clients' perspective on like what goals you want to achieve, and then seamlessly trying to have micro moments to guide them in that direction, or from their perspective, like how do you want us to drive this relationship? Right. You tell us. And how do we adjust to that? So those are the two big trends that I think are going to be huge over the next 10 years.
I'm going to steal that as an expression, the TikTokization of financial services. Guys, thank you so much for taking the time to join the panel today. Ruby, where's the best place to find out? Where's the best place to connect with yourself? Are you a LinkedIn man?
I'm a LinkedIn man, absolutely.
Excellent, excellent. Jorge, what's your financial education TikTok channel?
Working through it with my wife, who's a marketer. So I am getting crash courses in TikTok and TikTok influencers. But for now, boring old LinkedIn for me while I test the TikTok waters.
Excellent. And Matthew, where's best to find out more about yourself and Mobiquity?
As much as I'm splashed across TikTok, Instagram, and all the others at my daughter's bequest, it's good old-fashioned LinkedIn and the Mobiquity website as well.
Brilliant, excellent. I'm Ali Paterson from FinTech Finance. Thank you all so much.